Good morning, everybody. We have a mixed trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. May corn futures up 6.5 cents at 5:39. May soybeans are up 1 3/4 at 14.17. May Chicago wheat is down 3 cents at 6.48. May Kansas City wheat down 3 cents at 6.18. One housekeeping note here this morning. I will be running a live stream on Monday night at 7 o'clock Central Time, 7 p.m. Central Time. This will be part of the Grain Marketing 101 series. Re-owning grain sales will be the topic. I've talked about this a little bit in previous episodes, and we've got into this a little bit in some of the previous live streams. There have been questions about it. Some concerns about it. I think there are some misconceptions. So this is going to be a live stream dedicated entirely to re-owning grain sales, which if you've listened, you know that I'm not necessarily a huge fan of, but I'm going to explain the pros, the cons, the strategy behind this if you are to become involved in such an endeavor. So certainly tune in live on YouTube and also on Facebook. I'll have those links posted everywhere. And remember, you can ask questions live. That's kind of the whole point of doing it live. We've had a lot of interactive conversation the last couple go arounds here. So certainly check that out. Monday night, 7 o'clock Central Time. In the headlines here this morning, last week's corn export sales were the lowest of the marketing year. Net old crop sales of just 116,000 were down 74% on the week and down 96% from the prior 4-week average. There was some corn that was switched from an unknown destination to China, and then an unknown destination canceled about 700,000 outright. So this was the worst week of export sales in corn seasonally in at least like 10 years. Not a good looking week of sales at all. Old crop soybean sales were okay, I guess, at 334,000. Still really not good seasonally, but we had such a tremendous early part of the program that we don't really need to be selling much at all here. Soybean export sales seasonally do typically weaken this time of year, as things start to shift towards South America. Cargill reported that it would boost its U.S. soybean processing capacity. Big story yesterday. I think that this may have had something to do with that big intraday rally in the bean market. Cargill said it will invest $475 million across plants in 7 states amid a surge in demand for meal. While no new plants are being built, processing capacity will be increased at 5 plants. Measures to increase efficiency will be implemented at two other locations. The projects will be completed within 5 years, according to the company. Locations slated for improvement include Cedar Rapids, Iowa, Sydney, Ohio, Guntersville, Alabama, Gainesville, Georgia, Wichita, Kansas, Kansas City, Missouri, Fayetteville, North Carolina. Russia's winter grain crops have improved amid a mostly mild growing season. In December, the Russian government rated 22% of the winter grain crop in poor condition. That was the worst in 7 years. They've seen some recovery since. They've now only got 7 to 9% of the crop in poor condition. USDA most recently estimated Russia's wheat crop at where they had 85.3 million. That would be a record if realized. It would just eclipse the previous record of 85.2 from 2018. So still a lot of weather to go, but certainly the potential for a record wheat crop in Russia. Argentina soybean crop may be getting smaller. The Grain Exchange said yesterday that it would again cut its harvest forecast if sufficient rains are not seen in the weeks ahead. The exchange most recently picked a crop at 46 million, which is below USDA's estimate of 48 million. The exchange said only 10% of that bean crop is in good to excellent condition, although 70% of it is in normal condition. In terms of the forecast, it looks like the next 7 days are going to be pretty dry. And then the period, like the 7 to 14 day period, looks a little bit better in terms of rainfall, more normal-ish type stuff. So we'll see what happens with the weather here. The U.S. dollar trades its highest level since November this morning. Fed Chair Powell spoke at a Wall Street Journal forum yesterday, and he kind of stuck to the plan here in terms of the Fed and their policy. He said that he's not concerned about the sell-off in the Treasury market, which has resulted in higher long-term interest rates. You've seen yields on the 10-year note, on the 30-year bond increase to some much higher levels than what we've we've seen recently. Still historically, they're extremely low, but you're going to run into this issue here, or we could potentially run into this issue where, the Fed is keeping the short-term rate at zero, but you've got this higher rate environment in the 10-year and in the longer-term stuff. So he said that we're not to the point of government intervention yet in regard to that. He's not concerned about it. He reiterated that we're going to stick to an ultra easy monetary policy until the economy is very far along the road to recovery, and he doesn't think we're anywhere close to that yet. Crude oil futures trade fresh 14-month highs this morning. Spot month WTI futures peaked at 65.57 per barrel. That was the highest trade since the early part of January 2020. OPEC Plus extended oil output cuts till April. The Saudis will extend voluntary output cuts beyond March. Russia will allow only a small increase in production in order to meet local demand. You're going to start to feel this at the gas pump if you have not already. This is a chart of retail gasoline prices in the U.S. on average. And according to this chart, our average is $2.71, which is, not super expensive historically. We're getting up toward the higher end of where we've been, say, the last 5 years, but we're not anywhere near what we saw in like this 2011 through 2014 timeframe where gasoline at the pump was consistently in the like 320 to 390 range. So, we got down well under $2 here back in early 2020. I think about $1.77 is where we bottomed in terms of the national average in April of 2020. So we've gone up almost $1 more since then, and you're going to probably see some more pain at the gas pump here if you have not already. The cattle market finished yesterday with some marginal losses. Cash cattle trade is just stuck in the mud here, 112 to 114. I think the majority was 114 on Wednesday. Feeder cattle were down sharply yesterday. The box beef market was mixed. In the outside markets this morning, stock market trying to recover. The Dow's up 60 points. S&P's up 10. We've got the gold down $8. Silver's off a little bit. The U.S. dollar is up. Again, we at the highest level since early January in the dollar. Crude oil up $1.62, 65.44 in the April WTI. The bonds are mixed. If you need some more information from me, as always, go to my website, www.standardgrain.com. Go to the website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I will send you my morning email, which goes out every business day at 6:30 a.m. Central Time. That includes any overnight headline that you need to be aware of, all my grain marketing recommendations, all sorts of interesting stuff regarding spreads, option strategies, charts, graphics. I really get in depth on this thing, a lot more so than I can do in the videos and on the podcast. There's a text message service. This is a monthly deal. Cancel it at any time. No other fee, no other obligation. Everybody have a great weekend. Remember, live stream Monday night at 7. I will see you guys Monday morning.